An asset is a resource that has some economic value to a company and can be used in a current or future period to generate revenues. These resources take many forms from cash to buildings and are recorded on the balance sheet until they are used. Once these resources are used or spent, they are transferred from the balance sheet to the income statement and called expenditures. Here are some of the most common examples. Current cash and equivalents, accounts receivable, inventory. Still asking yourself, what is an asset? Let's look at each with an example of a business formation, because a company can acquire its resources in a number of different ways. Tom and Bob are starting a machine shop that will do general fabrication. When a company is first started, it doesn't have any resources. Thus, the Tom and Bob must invest their own money or equipment to get the company started. This initial investment is considered owner's equity. Both Tom and Bob contribute a piece of machinery to the new company. Once the business receives the equipment, it can start using that resource to generate income. When the company sells its parts, it receives cash. As the business brings in more jobs, Tom and Bob start to use their profits to purchase more equipment to fulfill additional orders. Tom and Bob work throughout the year growing the business until they run out of room at their current location. They need to look for a new building, but they don't have enough money to purchase it with the cash they have in the bank, so they get a loan. The bank lends the enough capital to purchase a building where they can keep their operations going. In our short example, we saw 3 ways 3 different assets were acquired. First, the company acquired equipment by a contribution from its owners. Second, the company used its own assets to purchase more assets when it bought additional equipment with its cash. Third, the company took out a loan to purchase a building. It's important to note that nowhere in the assets definition do I say that the company must own these resources. Remember the asset definition, it's simply a resource that the company has control of and can use to generate revenues. Many businesses have loans, notes, and leases on equipment that either directly or indirectly eliminates their true ownership of the resources, but they still have control of it.